Hello, my name is Victor and welcome back to the channel. And as I am sure you have noticed from the title of this video, I sold a put on SOFI stock today. And in today's video, I want to give you my thought process for how I came to this decision. And just want to say, if you enjoy these types of videos where I show you what kind of moves I'm making in the stock market regarding my own portfolio, be sure to give me a like and subscribe. It helps out the video tremendously. SOFI is down huge today here on the last day of September of 2025, and it is a move that I have been waiting for. I love to sell puts whenever the stock is down because that means that your premium for your put sold is going to be higher. Selling a put is actually a bullish move on the stock. I know it's kind of counterintuitive there. You would think selling means you don't want it. But if you sell a put, you actually want the stock to go up. And I have been waiting for an opportunity to start a position in SOFI, but 2025 has just been a year for SOFI to run. And run it has, because year to date it is up almost 85%, and that is after the 5% drop today. So an absolutely insane run here for SOFI. I have been keeping an eye on it for about a year now, and that is because I have been wanting to buy another position for my portfolio that's in the financial space. And SOFI to me seems to be the type of company that is growing at a rate that is incredibly exciting. But okay, the moment you have been waiting for, let me get you some info on my actual position here, and I sold the put on SOFI and gained $29 premium. That is money that I can use for basically anything that I want. If I wanted to take that money out and fill up my gas tank, I could, but I like to leave premiums in my portfolio to use towards future investments. My strike price is at $20, so long as SOFI does not drop to $20 or below, it will be out of the money, which is what I generally want whenever I sell puts. And SOFI tends to be a little bit more volatile than other stocks, but I gave myself a pretty safe cushion here with a minus 23% drop in SOFI for it to be in the money. Anything is possible in the stock market. I mean, all it takes is one bad news headline and SOFI could tank, but I feel like I have given myself plenty of room here just in case SOFI does end up going down over the next 31 days when this put sold would expire. So come Halloween, I will be sure to update everybody unless I make a change in between then, but either way, I will keep you updated. The whole point of selling puts is to get that premium, and it is a 1.5% projected return on my investment. You have to have the cash in your account in order to sell the put, just in case you are assigned. Because if the stock goes under $20 a share, I could potentially be assigned, and then I would have to purchase 100 shares of SOFI at $20. That means I have to have $2,000 on standby as collateral just in case SOFI does go below my strike price. I know I'm throwing a lot of terminology in this video, but if you have any questions about anything, be sure to leave me a comment below. I would love to answer your questions or make a video explaining what the heck I'm talking about. And also just want to mention, generally whenever I do sell puts, my range that I'm looking for is 1.5 to 2% of return on my investment. And I generally like to give myself a month's time frame because in my mind, it's basically like getting dividends on steroids because you make 1.5% in 30 days. I mean, where else are you going to make that type of return? Now, there are risks involved. Again, like we mentioned, you have to have your cash as collateral just in case the stock does go down and you do get assigned. But you can mitigate risks by choosing a stock that you want to own anyway. Rule number one, whenever I am selling a put, is I have to choose a stock that I want to own. If I can't see myself owning shares of the stock, I will not sell puts on that stock. It's just that simple. Number two, when it comes to my strategy with selling puts, is I see it as a potential discount purchase. Right now, SoFi stock is hovering around $26 a share. And I know what you might be asking yourself. Victor, if you want to own SoFi stock, why don't you just purchase the shares right now at $26 a share? I mean, the stock went down 5% today. Isn't it a great opportunity to buy? Well, yes, but let's go to number 3 here in the strategy, and that is you get a premium whenever you sell a put. While yes, I would love to go ahead and just own some SoFi shares, the strategy involves collecting the premium with the potential of purchasing the shares at a discount. So in my perspective, it's a win-win regardless of what happens. If I am assigned, then I get to purchase SoFi at a discount, and I was paid a premium to do so. So not only do I end up owning the shares if I get assigned, I got those $29 basically for free. And if I don't get assigned, then I get to keep the premium and I can sell another put sometime around Halloween. And I can continue to do this through the end of 2025 and just keep on collecting premiums through the end of the year. That is my strategy when it comes to selling puts and what I am doing in my portfolio regarding SoFi. Be sure to subscribe so that you can see what exactly happens with this position. Will I end up getting assigned and owning SoFi stock here in October? Or is the stock going to shoot up and today was just a fluke and I get to keep that premium to use towards other investments? Also, be sure to give me a like if you made it until this point in the video, and as always, I'll catch you in the next one. Peace.